just had some rate cuts, and we're getting ready for the back half of September. Now, historically, we know that September's not a good month, and everything's pointing to, um, a weakened back half. That's the normal, you know, seasonality of it. And so I think a lot of people are expecting this negative back half. But what I told you guys is in the beginning of September, I was like, maybe we're pulling this forward. Like maybe the bad's already happening. Can you guys hear me? Okay, good. Um, so what I'm thinking here is we have a chance that maybe we don't pull at the back end of September, right? So I'm willing to try to take some shots on some plays like Tesla, right? We got in Tesla last week. It looks good breaking out, right? AMD looks like it wants to break out. There's a few charts that I like that I'm willing to take shots on. Um, so it's not like I'm going to run for the hills and be like seeing 2 weeks. But keep in mind that this is um, the normal seasonality. Sorry. Okay, let me just rip through this real quick. Okay, so I sent a Substack email about why the Fed cut 50 instead of 25 basis points. If you didn't read that, just let me know. I'll give you the link. But um, it's a longer version of explaining, hey, the Fed is so um, what's the word? So concerned with the job market now, and they have so much ammo that they can use that I just don't think a recession is going to come. The worry for me is what is the Fed going to do? Are they going to cause a recession? And we got this new dot plot, and this new dot plot to me speaks volumes and shows what they're willing to do. And honestly, look at the spread. That it's like, hey, we don't know exactly what's going to happen, but these are the ranges that we're willing to play. And I just think I don't think it's going to happen. I don't think they're going to let us go into a recession. And one of the main things that they said was, we know it's time to recalibrate our policy. The focus is on jobs, right? So if the focus is on jobs, what that means is he wants earnings to be great. Because if earnings aren't great, CEOs don't hire, right? Um, and if the market starts to pull, people start to get worried. People start to get a little tight on hiring. And so when companies are confident about the future, that's when they hire. And that's the message that I think he's trying to send. Okay, so the main question here is you have to ask yourself, hey, are you in a recession? Are we in a recession? Because if you look over here to the right, this blue line is the median when an economy avoids a recession, and this is one if we enter a recession, right? So if I'm wrong and we're going to go into a recession, it's not gonna make my P&L look great because I think we're going up, right? Um, but you know, answer this for yourself. Um, and guys, just so you know, the confidence to buy dips comes from this. So you know how everybody got scared at the beginning of September, and I'm like, yeah, let's grab it. Because even if we do pull in September and have a negative month, I do believe towards the end of the year we're gonna have an end of year rally. This is how you get the confidence to buy dips. Recessions don't have GDPs getting raised and manufacturing expanding, right? So, there's a lot of, and in the past PowerPoints, I've gone through a lot of data points to show you that I just don't think we're anywhere close to a recession right here, right now. Is that going to change in 6, 7, 8 months? Maybe, but I think the data will show us, right? I think there's a lot of ammo left in the tank to push us up, right? Especially with the earnings expanding the way that they're going to be expanding as of planned right now. You can see the margin debt. It's not. It's nothing. It's not bad at all. So I put this in here again. This is a hit rate around the first Fed cut. And you can see healthcare stands out. I'm in XBI. Staples and financials do well as also. So next year, this is the 2025 expectations for earnings growth, and healthcare is number one there. Again, I'm in XBI. But understand that I'm not in XBI to get out next week or in 2 weeks or even in the middle of October when I think we will get a pull. So anytime that there's dips in these companies or ETFs that I like, I will be buying. And healthcare, of course, has the highest year over year. Now, this is what I'm talking about right here. Do you guys see this dip? So if you look at this green line, that's us this year. If you look at the blue line, it's non-presidential election years. Then you look at the darker blue line, it's presidential election years. You guys see this right here? Right, you see this dip? I think this is coming. And so I think we get another couple weeks of possible push, right? And then we're going to get this pull. And when we get this pull, I'm going to be a buyer. Dan, you're on the Gulf Coast? Nice. I love it. One of my favorite places there is Myrtle Beach. Not Myrtle Beach. What's the one that starts? Myrtle Beach is in South Carolina, somewhere up there. Anyway, this is another graphic that shows that the Fed is cutting near all-time highs, and the bulls loved it. You can see a year out. I mean, we're up a good amount. 14% on average, and I think it's going to come to fruition the same way. You can see though that within a month, it's like, well, 50-50 here maybe, but after the next few months, like that's when the rally really starts, and you can see. When we go back to this, right? Well, okay, well that makes sense if they do cut. If maybe we're a little lower for a little bit of period of time, fear of the election, but it has nothing to do with the 50 basis point cut, because this time is very different. This 50 basis point cut is very, very, very different than the other times, which isn't a good saying to have as someone who invests money, but being able to recognize that it truly is important. BTFD is buy the effing dip. That's what that means. It's a day traders saying, they have shirts that say BTFD. You're just buying the dip. That's all it is. And one of the things to think about as well is depending upon what kind of a trader you are, the best thing to do is just buy and hold, right? Like look at all these horrific things that have happened, but still 10,000 to 2.645 mil, right? Buy and hold is a great way to do it. So if you have a good company and it's in a good price right now, I think it's great to still buy it, even though we're expecting pullbacks. I think it's good to start buying good companies at good prices. And the fear of the election, like who's going to win and all this kind of stuff, you can see, it doesn't really matter who wins. We go up, right? Now, there are more extreme people running, right? But I don't think that some of their extreme views would get through to become laws and rules, because hopefully we will have a split, Congress. So hopefully the House or the Senate will be Republican and the other Democrat, and or we just don't want solid sweeps from Republicans or Democrats. Now, this week we've got continuous jobless claims Thursday. We got GDP. We got initial jobless claims, and then we got Fed Powell speaking again. I don't think he's going to say anything that he didn't say last week. So I think this is going to be a non-event. Um, but one of the things that I keep saying over and over again is the IWM. Um, the IWM held our lead last week, and I believe this is going to continue. Um, I don't think the S&P is going to do bad. I don't think I think S&P may go up another 7-8%, but the IWM will go up 10 to 12, right? And so I just think the IWM is going to start outperforming. It's been underperforming for such a long time, and we've got the stage set. Um, but think about what's going to be happening now that people are going to be able to start borrowing money, right, for a lot less and growing at a faster pace. So these smaller companies, their earnings reports should start going up. Okay. Again, XBI, I mentioned again right here. Now, for me this week, again, when I was going in and I was looking for companies that I wanted to possibly sell, right? Like, I'm getting out of MMM, 3M, right? That's getting off my long-term list because it's reaching what I consider valuation, true value. So I didn't see a whole lot though. So I was like, okay, well maybe we can push some more. But then I couldn't find a lot of charts that I liked. Tesla we're in from last week. Netflix we tried getting in, or I tried getting in last week, and I got stopped out. But I'm still willing to play it. And so those are ICB dailies. These on the right are ICB weeklies. And so if you don't know what an ICB is, it's just an inside candle. And the simple explanation is if we start breaking out, I want to be in those, right? Or down. You'll notice SMCI, NVIDIA, MU, ARM. We've got a lot of semis. Honestly, one of the best ones to play might be SMCI because you get that huge rain. That's why Nate likes it. But I think MU will have good earnings report, and I actually think from where we are now that we will go up. Again, I don't know if that's true, but MU is beaten down. Right? We've got this good beat down. Like if it was pushed up here, it's like okay, well maybe we need to pull. But I think it has a high chance of rising after earnings, which will be good for semis. Now this is another chart that the chart's beautiful. I love it. It's in the daily TTM squeeze. Now what I do on these, because it's out of the buy zone, I have to set an alert at the 80 EMA, and my plan is to buy it all the way down to this 187.50 to 188 areas, and I'm going to break it into 3 buys. Okay, and then another one that we got in last week was VKTX. Once this got over the major pivot point, right, that was the trigger for me to get in. And I've gotten about $5 out of this, but you can see this weekly squeeze is just starting. And if we can get this to fire long, right, I think we're going to come up here to this 100 level. Like I think we'll double top up here if we can get this weekly squeeze to fire. Okay. Nike, possible second day play, as well as there's another one. I forgot which one it was. But some of our long-term plays, like Nike got a new CEO. That's what caused it to pop. Intel got approached by Qualcomm for a possible merger. They also had a $5 billion offer to invest, right? And so, anyway, you're going to start seeing these people come in and step in for Intel, in my opinion. And then PayPal partnered with Amazon Prime checkout last week. So that's some of the news on the longer term stocks. And that is it. Okay.